All right, well, let's get started today, everybody. Good morning. Welcome to Steps to Business Success, a webinar by the Indiana Small Business Development Center hosted by CDFI Friendly South Bend. My name is Sam Centellas. I'm the Executive Director of CDFI Friendly South Bend. I'll introduce Alan in a second here. First, I like to always do a Spanish announcement at the beginning of our webinars. El seminario hoy va a ser en inglés. Pero si necesitan recursos o ayuda en español, por favor nos puedes llamar o mandar un mensaje a CDFI Friendly South Bend y podemos ayudar. So we put all our recordings out on the web. We like to make a Spanish announcement that CDFI Friendly South Bend can help in Spanish, and so can most of our partner organizations, which is great. And we want to make sure that we're always inclusive of the community that we serve. So a couple things. Everybody is muted today. What we would prefer is if everybody uses the question and answer box during the session. Those pop up when you write them. I'll kind of be hosting it in terms of questions, so feel free to write things. I know I forget to ask questions if I don't write them down right when I'm thinking about it. So feel free to pop a question during Alan's presentation. We will cover those at the end. The other thing, there's no dumb questions, so please ask stuff because these will also then be listed in the webinar that people will watch later, and watching this webinar will be a requirement of the program that we're going to talk about a little bit towards the end. So with that, if you want to advance us, Alan.
Okay.
So one, the premise of today is that we're working to help build capital-ready businesses here in our region. And so, so we consider, I put the definition up here, I won't read it to you, but one of the things that's important for CDFI Friendly South Bend is our job is to help connect small businesses, small business owners to capital. And so that's generally applying for financing. And there's some core steps that need to happen with a small business in order to be ready to apply for financing. And so we're proud today to partner with Alan Steele at the North Central Indiana Small Business Development Center. They are located on the IUSB campus, but they're a great place that helps businesses do all those steps to be ready to what we call to be capital ready. And so today we wanted to start off with these steps to business success and the nuts and bolts and the core pieces that really are what creates your business. And so with that, I'm excited to turn it over to one of our partner organizations, the Indiana Small Business Development Centers around the state. Alan's been a great local partner since before I even had this job. So we're a brand new nonprofit, only been around a couple years, but have been excited to kind of work with Alan for many, many years in supporting entrepreneurs in our area. And so I will let Alan take it away.
All right. Thank you, Sam. Good morning, everybody. Excited to be here with you. Excited to be partnering with CDFI Friendly and working together to advance opportunities for entrepreneurs in our region. So we're going to walk through a few steps today about becoming capital ready. We'll talk about how you go about formalizing a business enterprise, getting registered for taxes, the importance of a banking relationship, some thoughts on financial record keeping, and finally identifying some of the critical documents in running your business day to day, but also providing the information necessary for a lender to consider an application. So let's start with the topic of formalizing the business. So what do we mean by formalize? Well, when a lot of people start out, they are simply operating as what's called a sole proprietor. They may have gone to the county recorder office to file an assumed business name, which is basically saying something like, I'm Bob, and I'm going to do business as Bob's Painting Service. So you can get into business that way. And again, that's how a lot of people start. Formalizing is the process of actually filing your business at the state level and creating a business entity. So why is it important to do that? Well, a couple of very practical things. Number one, sometimes programs come along that require you to be a formalized entity in order to participate. So that is one reason. Another incredibly practical reason is protecting yourself from liability. So when you're operating as a sole proprietor, if we go back to Bob, if something bad happens on one of Bob's painting jobs and he damages the customer's home and the customer says, I'm not satisfied with what you've done to fix the problem. I'm going to sue you. Well, as a sole proprietor, Bob is getting sued personally. So all of his assets are on the line. If you have formalized and created a business entity, it is now the business entity that is going to get sued. It is the entity that is carrying the liability. And so your personal assets are now being protected. So going forward with forming an entity, there are a couple of basic choices. The most common, and one that we see about 95% of our clients choose, is to become an LLC, a limited liability company. The other option is to be a corporation. Either an LLC or a corporation structure will provide that liability protection. It will establish an entity separate from you. The LLC formation process is a little more streamlined, and the ongoing reporting requirements are also a little more streamlined than for a corporation. So that's where a lot of people choose to begin. So to create an entity, you can file that with the Indiana Secretary of State through a portal called InBiz. So it's inbiz.in.gov. For most folks, it will take about 20 minutes to complete the registration and get your entity created, and the cost is a little less than $100. So not an insignificant amount of money, but also a pretty reasonable investment if you think about the benefits of having a formalized structure. So if you go to do the filing, there are a couple of terms that may be unfamiliar. Number one, you will be asked to designate a registered agent for the business. And the registered agent is simply the person who will receive all of the official communication from the state. You can be your own registered agent. And that is where sometimes people get tripped up. They think the registered agent needs to be a third party. It does not. You can be your own registered agent. The other question we see tripping people up sometimes is you will be asked if the entity will be managed by managers. And if you're going to run the business yourself, the answer is no. You would only say yes to that question if you are going to pay someone to run the business for you. All right, so once you've got that entity established, step two is getting an employer identification number. So this is simply a numerical identifier for your business. And maybe an easy way to think about it is that individuals get Social Security numbers, businesses get EINs. So there's a rather bulky link on the slide there. We can provide that to you following the webinar, or you'll be able to access it in the recording. Once your entity is confirmed by the state, you can go to this website and walk through the process of getting your EIN. There's also an option to do it by phone if you would prefer, and the phone number is on the website at that link. Getting an EIN is free. There are folks on the line that are promoting the service of getting EINs for businesses and charging around $200 to do so. You don't need to pay that. You can do this yourself. It is free. A couple of other registrations depending on how your business is operating. If you're selling a tangible product that is subject to sales tax, then you will need to register with the Indiana Department of Revenue. And again, we've got a link there for more information. The DOR is, I think, the gold standard for helpfulness among state agencies. They're fantastic. So if you have questions, they're wonderful to work with. If you are going to have employees, then you are also going to be required to register with the Department of Workforce Development and set up to pay into the state unemployment tax system. So again, if you are going to be responsible for collecting sales tax, or if you're going to have employees, these are additional registrations you'll need to complete. Okay, once you have your registrations, you have your EIN. Now you want to establish a business bank account. And so why do you need a separate account just for the business? Well, a couple of reasons. We talked about the business entity, the LLC or the corporation, providing protection for you from a liability perspective. That protection requires you to demonstrate that the business is an independently operating entity from you personally. And one of the ways to establish that separation, to prove the integrity of the entity, is for it to have its own bank account. That means that all of the income that comes into the business, anytime you make a sale, the money is going into that account. Anytime you're paying an expense related to the business, the money is coming out of that account. So you're getting that separation of business and personal banking. This is also helpful in terms of beginning to put together a skeleton of a system for keeping track of the business's finances. It's going to be much easier for you to get your information organized if all of your financial transactions are in one place, in one account. So, as I said, starting the bank account and keeping a detailed register of all the transactions in and out will give you a skeleton of a bookkeeping system. And when I began working with small businesses 15 years ago, one of the things that surprised me the most was how many businesses didn't do any financial record keeping beyond the checkbook. And that works in terms of telling you if you have any cash on hand. It doesn't really work as a system to tell you how the business is doing over time. So we're going to talk about some of the other statements or reports that will be helpful for you to generate. And one of the considerations here is, do you do this yourself or do you hire a bookkeeper? A lot of us don't enjoy accounting. I've noticed over the years, a number of entrepreneurs are not comfortable with the accounting. And it can be a good investment for them to spend a little bit of money with an independent bookkeeper every month just to reconcile the bank account and create some financial statements that are going to make it much easier for you, frankly, to keep track of what's happening financially in your business. So two of the most important statements, the first one is an income statement, also called a profit and loss or a P&L. And this is a statement that shows for a designated period of time how much money came into the business and where it was spent. So how many sales did you make and where did the money go? And then once you subtract those expenses, how much of a profit was left over? We'll look at a sample of an income statement in a moment. Second critical statement, and one that lenders always want to see, is what's called a balance sheet. And this is essentially a document that captures at a particular point in time the business assets. In other words, what does the business own? This could be cash on hand, real estate, could be money that people owe you, what we would call accounts receivable, could be vehicles that are owned by the business. Anything tangible that you own is an asset. The other side of the balance sheet are the liabilities. What do you owe? So this is comparing what you own and what you owe. And that's a good transition to the next document, which is the personal financial statement, which you might think of as a balance sheet for you personally. So most lenders will want to see a personal financial statement. Many lenders have their own template for this that they will want you to use. And this is essentially a document that, again, is going to capture what do you personally own and what do you personally owe. Now, sometimes we get the question, well, what does my personal financial situation have to do with getting credit for my business? From the perspective of the lender, it means a great deal. If you're the lender and you see an application from a business that looks relatively financially healthy, but then you look at the personal information of the owner and you see a chaotic financial situation, as a lender, you're not going to be comfortable loaning to the business if the owner's personal finances are in shambles, because you're going to be worried that the money will leave the business to fix the personal problems, and now you don't get repaid. So the personal finances always get involved in consideration for lending. And then the final financial document are your income tax returns. Make sure every year, well, first of all, make sure you do the taxes, make sure that you stay current, because not being current will be a huge red flag for a lender and will pretty much stop the process at that point. It won't go any further until you get caught up. So make sure you stay current, but also make sure that you have copies of your returns accessible, because you'll need to provide those to lenders as they're considering your application. So let's now look at an example of an income statement. So we can see here that at the top, we're listing sales revenue. So the business sold $500,000 worth of products. And just for sake of illustration, let's say this is a company that makes leather goods, maybe makes wallets and belts and purses and things like that. So they sold $500,000. Now we're identifying the cost of goods sold. That is the ingredients, if you will, the products that were used in making the belts, the wallets, the purses, etc. So this business spent $150,000, and that was probably buying leather and hardware, anything that made it into the finished product. So when we take the sales, we subtract the cost of goods sold, we now have a gross profit of $350,000. Now we're going to subtract the various expenses. So this business paid $2,500 for accounting services, $25,000 for advertising. If we continue on down the list, paid $100,000 in employee wages, paid $24,000 in rent, paid $12,000 in vehicle expense. We add all of those expenses together, and they come up to $258,500. So now we subtract that from the gross profit of $350,000, and we're left with a profit or a net income before taxes of $91,500. So you can see, if you were going to put this statement together, all of the information here is going to come off that business bank account, but by organizing it by category over a period of time, you can see this is a much more useful tool for seeing what's happening in the business than flipping through page after page of a check register. All right, now let's look at a sample balance sheet. So you'll see on the left side, we have assets. These are things the business owns, and they are separated into current assets and long-term assets. Current assets are things that are cash or can be converted to cash relatively quickly. The long-term assets are things like real estate, buildings, fixtures, equipment, things that are not liquid, cannot be easily converted to cash. So we add together the current assets and the long-term assets, and we see a total of $171,900 at the bottom of the left column. Now you'll notice that the amount at the bottom of the right column is the same. And that's why this is called a balance sheet, because the left side and the right side must be in balance. They must be the same. So the formula for the balance sheet is assets equal liability plus owner's equity. And the owner's equity is basically what is the cash value of your ownership in the business at this particular point in time. So in the liability section in the upper right, again, we have current liabilities, things we would expect to be paying in a relatively short time, and we have long-term liabilities. Here the amount is $99,500. I'm going to guess that started out as a $100,000 loan to pay for those leasehold improvements we see on the asset side. So when you see a long-term liability, that's frequently some sort of a loan or a note payable. So the assets of the business are $171,900. The liabilities are $149,950. The difference is $21,950. That's the owner's equity. That's the cash value of the owner's stake in the business at this particular snapshot in time when we capture the balance sheet. Okay, so we talked about the importance of filing taxes. Again, it is absolutely critical to stay current. So if you're behind, make a priority of getting current. You also want to file taxes for a very practical reason, and that is there are a number of costs and expenses associated with the business that reduce the business's income and therefore reduce the tax liability. So you want to make sure that you're taking advantage of those benefits. It's also critical that you have a method for keeping your business documents organized and secure. So you want to make sure that all of these documents are protected and they're accessible when you need them for working with a lender. So one more document, not a financial document, but something that's important and most lenders will want to see from you, and that is a business plan. If you go online and just do a search for business plan template or business plan outline, you'll see hundreds of examples. And there is not one format that is the standard. Okay, so plans don't have to look the same. As a general rule, I think that the more complicated a business is, and the more money that you may be trying to borrow, the more detailed the business plan needs to be. A common thread of the plan, whether it is a very simple plan or a lengthier, more complicated plan, is these key sections that we've identified here are going to be represented in some form. So what is the opportunity the business is pursuing? Where are you located? What are these specific products and services that are being provided? How do you describe your target customer? How many of them are there? Is the market growing or shrinking? What is the competitive environment and how do you compare to the companies you're going to be competing against? What's your plan for marketing the business? Who are the members of the management team and what are their qualifications? How have you legally structured the business? That's the entity that we talked about earlier, the LLC or the corporation. What's your plan for managing risk? That frequently involves insurance. Most lenders will require 2 to 3 years of financial projections. These are forward-looking estimates of how much money the business will bring in and how much is going to be spent. And the story that the lender wants you to tell with the projections is essentially how are they getting paid back. So they want to see a projection that includes a loan payment so they can see that the business is going to thrive at a level that allows them to be repaid. And then finally, the plan should include what are the next steps? What are the things you need to do to turn the plan into reality? So those are the steps: formalizing the business, making sure your registrations are complete, having a bank relationship in place, having a good system for record keeping, and for managing your documents. So we can take questions at this point. Just a quick plug for the Indiana Small Business Development Center. We have a team of 5 people. As Sam said, we're based at IU South Bend. Our services are free. So one of the things we do a lot is work with business owners on putting together those business plans. We're not a service to write the plan for you, but we can coach you through the process, and we can provide a lot of research and data to help you put those plans together, and we're happy to assist. So, Sam, I guess if we have any questions on this portion, we could open that up now.
So drop questions in the Q&A box. You can also drop them in the chat if you'd like. It might be disabled, so I prefer the question and answer because we can save all those. One thing that I wanted to make maybe a question to Alan, as I get a lot of it, is people have fear over business plans. How long should the business plan be?
That's a great question. And the longest plan someone has ever brought me to review was 200 pages, and nobody wants to read a 200-page business plan. We have had clients successfully borrow over $3 million with business plans that were 8 to 10 pages long. So some of the templates and outlines that you'll find online tend to be a little redundant. You'll wind up saying the same thing in multiple places. So we prefer templates that are more streamlined, that really just provide the essential information. So again, we see a lot of plans that wind up, between 6 and 15 pages. And most of the time that is perfectly adequate to get the job done.
Yeah, and I always chime in the same. I get a lot. I think a lot of people have fear over that, so that's why I like to make sure we talk about it a lot. And I've told small business owners that I've worked with that I've seen fantastic plans in 3-4 pages that cover all the bases and tell me what I need. The longest plan I've seen so far was 65 pages, and it told me almost nothing that I needed to know except the business owner's name. And so I've also had a lot of businesses I've met with that are like, we paid a consultant $1,000 to help us put together this plan. And I've also generally found plans that someone has paid someone to put together for them to also not be good. There's a lot of great resources. Obviously, Alan Steele and the ISBDC are a great resource, but there's others as well. So if this is one of the parts that scares you about helping to make sure you formalize and move forward with your business, that it's something that there's no need to be scared of. There's a lot of people who can help you and to put together a good plan. Other
Absolutely.
questions or common things that you hear, Alan? And I'm going to start getting ready to share my screen. I thought Yola for sure would have a question for me. All right. And well, if there's none, we'll have a question and answer period too at the end. The other common one that I get for businesses, or just as a suggestion to give businesses, is the thought process around starting your financial tracking early. So I've had a lot of businesses that the first year, and I get it, right? You started a side hustle, it's just kind of going. But if you wait till your 3rd, 4th, 5th year to start a real organized system, every year filing your taxes gets more and more expensive. Every year you're getting farther and farther behind, and then it's harder to put it together. It's easier if you start early when you have maybe 3 or 4 different types of income and expense categories, and then as it grows, you're adding to it versus waiting till it becomes a monster and then figure out how you tackle that. So we do have one question here. What would you recommend as the first step to go from managing finances with just a checking account to preparing formal business financial statements? Can you help make introductions to bookkeepers?
Certainly, there are a number of good folks in the community who are doing bookkeeping, so we can point you towards some of those individuals. In some ways, if you're keeping up on your taxes, if you're a sole proprietor or an LLC and you're doing a Schedule C with your taxes, which is profit or loss from a business, the Schedule C is basically an income statement. is showing how much came in, how much went out. And for people who are using Schedule Cs, which is a lot of very small LLCs, I recommend you think about setting up your bookkeeping categories to mirror what the categories for expenses that are on the Schedule C, so that at the end of the year, it's really easy just to move a number from one column, in your bookkeeping onto the Schedule C. So thinking about, in terms of a first step, I think thinking about how the expenses are organized, how you're grouping them together is probably a good step. And again, that's the kind of thing that we're happy to help with.
Excellent. All right, so keep questions coming if you've got them. I'm going to start kind of the second part of our presentation talking about our capital coaching. And so this is something that ideated and worked on with Alan and several other people here in the community to launch this new program. So the goal of CDFI Friendly South Bend is to connect borrowers to financing, and especially borrowers that might not have traditional access to finance. As Alan mentioned, often local financial institutions are going to want your business to be established for 2 to 3 years, right? So CDFIs, for example, generally will help finance startups. But what we found is that a lot of businesses that are seeking capital aren't what we've called earlier as capital ready, right? So they don't have a financial system in place. Some aren't legally organized. Some have been a real successful side hustle, and they just haven't made that transition yet to becoming a legitimate business and in a position to be able to grow. And so part of our role has been to work with technical assistance providers to help, like as Alan just described, here's the things your business has to do if you want to be capital ready. And then what we want to do is take that baton then and say, hey, if you're capital ready and you've got these things, even if we need to sharpen up a couple things, if you've got those things, we want to help figure out getting you to the financing that your business needs to grow and succeed. And so we actually have a pilot grant from the Indiana Economic Development Corporation that we've received to help do capital coaching. And so this is designed, right, as I described a little bit, and we're a couple core parts that we want to work on. And so the goal of this program is if your business has these other steps that we've just described put together, even if some of them are still a little rough and you're working on them, but you've got them put together, we want to help have that conversation with you about what it is you're seeking. We will help you get your financial documents ready to apply for a loan. And then we'll help you apply for it. We'll help you understand feedback from your lenders on why you got approved or didn't get approved, and what your next steps are in terms of now handling that loan and or applying for other options if you weren't approved. And so that's our goal as an organization, is to help small businesses do that. And we also want to help small business owners become a little more knowledgeable about what all the finance terms mean. So I shared this with everybody. When I got involved in the finance industry, right? I've worked in nonprofit pretty much my whole career, and now I'm in nonprofit finance. And I had to learn all these terms like amortization and debt to income ratio and all these things. And so as a small business owner, you don't want to have to learn all that. But we want to help you learn and understand the pieces that are important for you, so you understand how a line of credit might work if that's what you're seeking, how a term loan functions in terms of its cost to you as a business. And we want to help you with those pieces before we just start applying for loans out there. So we do have a question, and that's something, let me do that. So I'm going to cover Ruby's question, and I'm going to put this up here. So we have a question came in saying, is there information that we provide about repairing credit? So it is a program that we do, and will be a recommendation that we make for clients who enter this program. We have a capital coaching or a credit coaching program that we partnered with Allies for Community Business in Chicago with. Where a small business owner that's looking to improve their credit score can apply for a small $2,500 loan from them after they've completed certain steps. So that information's on our website. We share that quite a bit. This might be something that for some of the businesses that apply for our capital coaching program, that we say right away is, hey, we need to help establish your credit a little bit more. And I would say, I know we've got some of our finance partners on the line here as well. And so nearly almost every bank, credit union has similar type programs or something that they can do one of the things that we do on an initial meeting with every client is we ask where they currently keep their deposit accounts. Where do you bank? And so that's a great place to start to say, do they have a small $500 loan or something similar? Without getting into the curriculum of our capital coaching, that's part of what we'll do. So we're going to intake a business. We're going to assess their knowledge of finance. We're going to assess their needs. Are you looking for a $250,000 real estate loan? And then we're going to talk about what that process looks like to get there. Or are you looking for a $10,000 small business loan to purchase a piece of equipment? And the program will be tailored to that. And so part of, I'm not going to read the slides to everybody, so they can either do that while you're listening to the recording. But the goal for us will be, and when you apply for a coach and you fill out this form, we're going to ask you questions like, what's the size of the loan? What do you plan to do with it? Give us some of your business information. On that intake process that I'll do, we'll kind of determine who would be an ideal coach for you and what would be some great next first steps in getting your coaching going. And so one of those things too, and I won't get into all the details of it, is examining credit and talking about credit and credit building, because it's a very important part. Oftentimes small business owners, because we've seen a video on TikTok that says like, oh, just take out an EIN and now you have brand new credit to start over, and it's business credit and it doesn't matter your credit anymore. And that's just not true. And that's something that we want to make sure people know and can help repair their personal credit. So I have a couple questions popped in, and so I want to jump into those. Well, let me finish covering my program here, and then I'll my last thing that I wanted to announce before we just take questions on this, which is technically the next slide. The other thing we want to say is our program, you'll apply for a coach, and the goal is for ideally every client to get at least 10 one-on-one hour-long sessions with a coach. Our intake application will actually ask whether you want to meet face-to-face or virtual or hybrid. And because we've asked about the type of business, we'll know what you're looking for. So we will work to try to pair you with somebody. For example, yesterday I connected with a potential coach that has worked in real estate for a long time, wants to help do some coaching. And if we get a client that's looking for real estate lending, this would be a great coach, and they will sit and start this process. And we've written out a 10-week curriculum, step-by-step, assuming you need all those steps, to go through the process, which even includes applying for the loan and then having a wrap-up meeting after you've heard back about the loan about what next steps are. Because almost always, most loan applications, the first thing is going to be either not yet, maybe, or not this application, but let's look at, do we need to look at a different lender, or do we just need to reorganize your finances a little bit? Do we need to do some credit building before we go back at it? So the capital coaching will be really comprehensive, and it's something that hasn't been available locally unless you know somebody who does this work. And this is how we kind of designed the program. Was I've seen in the community a lot of other small business owners who have an uncle that knows how to do these things, or have a family member who's built businesses and helps them through the process. So for people who don't have somebody that's coaching them, whether that's a friend or family, they can turn to CDFI Friendly South Bend and the Indiana Small Business Development Center, and we can help you through that process. This is what it's designed to be, a friendly one-on-one way that it's custom tailored to what you're looking for. Okay, jumping into questions. I hear a lot of bankers say a small business needs good credit, but they don't oftentimes explain how to get there. What types of things help a small business create great business credit? And so you've already got one of the first. So I already have a business credit card, but what other things help? So a couple things that help in terms of like that profile. And one of the things might be, without getting into a lot of the capital coaching here, I do want to jump into, I'll talk a little bit about the balance sheet. So one of the things that a small business can do is looking at your balance sheet is what helps you look at what is your potential for lending. But on the credit building side, always say that small businesses should take out a business credit card. And so that's a great way to start building credit with the business name. The owner will be attached to it, but that's a great way to do it. So you're on the right steps. The other way to do it is then to start increasing limits or purchasing something that you take out on credit. So a lot of business owners, I've had, for example, a lot of like restaurant owners or catering owners will actually take out a small loan to buy some equipment. So they'll be like, hey, and usually sometimes it's financed by the equipment manufacturer. So they're trying to buy $5,000 piece of equipment and they get that financed by the vendor. And so I've seen that quite a bit where they've got a small term loan in order to purchase equipment. So those are ways that, your first loan for your business is not generally going to be a large loan to purchase a building and build out a restaurant. It's going to be to purchase equipment, to purchase some catering items. And then as you show that you've paid those off, that helps. The other one is I've seen a lot of businesses have kind of go back and figure out how they think about inventory. So a lot of small businesses, when you're working with them, don't take into account, well, yeah, I have my construction company, I have 2 trucks, and I have tons of materials and equipment. And so that's all that all has value. I recently helped a small business owner actually leverage value in vehicles that they owned in order to get a small loan to make some equipment repair that they needed. And so those are all ways that, looking at your balance sheet, saying, how do I help increase my assets in a way legally, right? In a way that banks will look and say, hey, this business is successful, and is something that we can bank on. The other one is leasehold improvements. I've seen several businesses have a lease and they drop $50,000, $60,000, $80,000 in improvements in a building, but they're not tracking that as value to the organization. So I don't want to get individual there, but those are a couple things. And this is why balance sheets are important, because you write it all out. These are things you should be getting asked when you're doing your taxes as well. But that's another area where small businesses really struggle, is making sure they're filing their taxes properly, and at all, but especially properly, and getting those done correctly. Excellent question. So next question, and now I'm just like kind of running around here. So can we get a copy of the slides as well? The service location. Okay, so there's a couple questions here, so I'm just going to answer them kind of as I go. The recording of the webinar will probably be available on Monday. I got to get the video. I got to crop out the beginning where Alan and I were trying to figure out how the PowerPoints would work. And then we will actually put it on a page on our website. So it'll be available for anybody. We'll have a page on our website. It will include all of the links that we shared. And so those will all be there. We won't post up the whole slides, but you can get any of them from the video. So you can screenshot any of them there. And so that's an easy thing. Are the service locations flexible? And so for the capital coaching, it can be wherever, right? So I expect those meetings to happen, whether it's the business owner and we didn't ask this on our form, I might have to add it, whether you want the capital coach to maybe come to your business, which could be something that could be worked out. You could do those virtually, which means you can be anywhere and the coach can be anywhere. Or we could host those at different places around town. You mentioned like Chamber of Commerce. There's space in, for example, if you were at already working with the ISBDC at IUSB and you want to do your capital coaching there's the grill and there's places on campus there where you can kind of get away and just sit and spread out and work on documents and have conversations. All right, I think I covered all those questions. Thank you. And you're welcome. I'm glad this has been informative. All right, so we are on our question and answer period here. So I'm going to go back to the end here. What I did want to put up was our email addresses here for everybody to get. I apologize. I know that I've got the world's longest domain name. And it's 10 years running. When I worked at La Casa de Amistad, I used to tell people I had the world's longest domain name. I actually beat it with my following job. Alan's is nice and short, which is easy. Alan's great we'll get back quickly. I generally get back in about 48 hours to everybody, and generally can book appointments in a week or two, depending on what the need of the business is. But yeah, so expect on the maybe following up on that last question, things will be posted by Monday. You all will get an email. So everybody who attended the webinar will actually get an automated email from Zoom. But I will send specific emails. You all should have gotten an email from me yesterday, but I'll send a specific email to everybody who registered for the webinar on Monday. Ideally, that's when we'll have it done and posted, saying, hey, here's the link to the webinar. If you go to CDFIFriendlySouthBend.org right now, you can see some of our past webinars there in the format where we kind of post the video, which we put on YouTube as well. And then text related to it. So I know Alan shared a lot of links. So we were going to put that in there. And then we were going to put the link to the application to apply for a capital coach. All right. Good questions, everybody. All right. Oh, one more. So the question is, why is the third year of a small business important to banks and organizations that provide programs for small business success? If a business makes it still alive and functioning after the third year, does that mean we've passed the hardest part of the starting process, or is it really 5 years? I don't know, Alan, if you've got some feedback on that, I'll go ahead and jump in and you can jump in a second. I think generally, I think what I think, we've actually got some banking partners on here, so they could maybe chime in with a pseudo question as an answer here. But I think part of it is they want to see 2 years of taxes. And I think that's a core part of it. And so it'll take a business to be around that long, assuming you file taxes, to have a tax return to show. And so I think that is a large part of it. I think the other one is, it's harder. And I use this example. I talk about sliders on an equalizer, right? Like a DJ soundboard, where the younger the business is, the harder it is to lend to, and the higher the criteria is going to be for success, right? So if it's like, I'm just a startup business and I don't know if I'm going to make money or not, but can you give me a loan? Right, then I'm going to want, from a lender standpoint, I'm going to say, well, I need to see some concrete stuff that shows you're going to make money. Versus if your business has been around for a year, 2, 3 years, and you're like, well, I'm making $1,000 profit per month. A financial institution can look at that and go, well, we can probably provide a loan that'll cost you $500 a month because we can see that you're making double that. And it's a way to help you scale and grow. And so that's part of where they will see that. And part of what we've done, CDFI Friendly, with other clients, and what our capital coaches will do is insert potential loans in your financial information to say, okay, so if you took out a $50,000 loan over 8 years or whatever the terms were, right, we would set up what those payments look like, and we would put that into your financial documents and go, you can't afford this. Versus like, here's a size loan and here, or you could afford this, but you need to be making this much more. So then you need to start making that much to figure out how we're going to pay that loan. So that's a little longer answer, but part of that. I don't know, Alan, if you have anything to add on top of that, or.
No, I think that's good. I don't think that, year 3 is necessarily magic or year 5 is magic. I think, as you said, it's really just about being able to show a track record and show that you have some traction in the marketplace, you have a consistent customer base over time, and just the longer you're around, the more sustainable you look, right? So I don't think it's that year 3 is magic, but just getting established is super helpful.
All right, we'll hang out for another minute or two if someone else wants to drop another question. I know we're close to our 11 o'clock ending hour here. And so with that, I want to thank Alan for the time today. Really appreciate this one concise overview. He covered all that in about 25 minutes. And that for any small business, right, whatever you're doing, whether it's making cupcakes or trying to build affordable housing, how your balance sheet, how your income statement, right, the type of financial documents you use are different, which is part of why we're moving forward with wanting to do one-on-one capital coaching. You can't do a program on how to build a better balance sheet for your business with 10 businesses in the room, because you need to really do 10 webinars for that, right? And so that's why we want a one-on-one sit with somebody to say, what's your business doing, and how can we help it do that better, and if and when does financing make sense for your small business. So we're really excited about doing this. So thank you, Alan, for this overview of the core steps to business success. For everybody else, you've gotten emails from me, as I'm assuming how you got onto this webinar today. You can buzz me questions about the program that's coming up if you've got them before Monday, but by Monday for sure, we will post all the links and information related to how to sign up for Capital Coach and the full recording of this webinar. So thank you, everybody, and have a great day.